Tired of chasing that elusive dream called financial success? What is financial success anyway? Is it a certain amount? Is it $1 million? Is it hundreds of thousands? Or just enough to get out of debt and pay your bills without having to worry? When you consider that the average household income in the United States is just $43,000, financial freedom does not have to be that much. An extra $500 per month would avert 85% of bankruptcies in the USA last year. The monetary system seems to trap people into a form of financial slavery and keep them there most of their lives. The more in debt that you are, the more the financial system benefits. Credit card debt. With a $3,000 limit, if you were to pay the minimum monthly payment, it would take approximately 20 years to pay it off. Credit cards allow you to buy the things you want now, but inhibit the ability to have what you need in the future. Vehicle lease debt. How much is your vehicle really costing you? Mortgage payments. $250,000 home costs much more than that over the full term. Loan debt. Do you have payments for flat screen TVs, furniture, travel, vacations, student loans, home improvements? At age 65, 53% of men and 82% of women still need financial assistance just to live on a day-to-day basis. So if most of the population is in debt, where is all the money going? Consider this. Ever heard the phrase, money makes the world go round? Average automobile costs $25,000. So for every 40 cars, that's $1 million in cash flow. Average home costs $250,000. So for each 4 homes, that's also $1 million in cash flow. We are surrounded by money that flows past us all the time. Literally. When you drive to work, when you arrive at the office, as you pass people's homes, when you travel on vacation, when you pay your taxes. Hundreds of millions of automotive dollars, billions of real estate dollars, trillions of tax dollars. The financial engine that drives all of this on a global scale is called the Forex market. The Forex market is quite simply the largest market in the world. According to the Financial Times, the daily volume is upwards of $2 trillion per day. Let's look at how much that really is. Imagine a global lottery that amassed $2 trillion before someone won. If they were to be paid out $1 million per day, it would take over 5,000 years. That is a lot of money. This $2 trillion passes us each and every day, 24 hours a day, 6 days a week. It passes you, it goes through you, it goes over you, in cyberspace. Unlike the stock markets of the world, there is no physical location for the Forex market. This $2 trillion per day moves from bank to bank, country to country, continent to continent, via the internet. We invite you to join us for the next few minutes on a journey of discovery regarding the Forex market. Let us show you how anyone with a computer, a connection to the internet, the right software, and some basic education can tap directly into the Forex market. The Forex market is the main circuit, if you will, the pulse that makes the world go round, the financial heartbeat. We'll teach you how to plug into this current and take as much as you need, according to your capacity, virtually any day, anywhere in the world, via the internet. If we could teach you a skill that you could take into the rest of your life, where you can tap into this ever-increasing pool of money, per month, per week, per day, would that be a valuable use of your time? So what is the Forex market anyway? It is the movement of currencies from bank to bank. The major currencies that represent 85% of the market are the Euro, the Great British Pound, the Swiss franc, the Japanese yen, the Australian and the Canadian dollars, all traded against the US dollar. This money flows in and out of the United States every day, mostly as a result of economic indicators and the result of this data. So what are economic indicators? Economic indicators are the tools that governments use to measure and report on the health of their economies. When we watch the news, they were often mentioned. See if you recognize any of the following: import-export rates, balance of payments, manufacturing reports, consumer confidence reports, jobless rates, housing starts. So, let's for example say that the release of the economic indicator for housing starts is very positive for a particular month for the United States. This means that more jobs are sustained and created. Carpenters, builders, plumbers, electricians, lumber, inspector, mortgages, etc., etc. All pay more taxes. Good for the government, good for the economy, good for the US dollar. As a result, money will start to flow into the United States from the European and Asian markets, which in turn drives up the value of the US dollar. So where does this money come from? Banks are the big players. Corporations, pension funds, and institutions are also major contributors. As a result, in this example, of the US dollar increases, the value of the euro, Great British pound, Swiss franc, Japanese yen, Australian and Canadian dollars would be decreasing. Therefore, let's say a pension fund had substantial deposits in euros and the value started to decrease. They would convert a portion by selling euros and buying US dollars, thus fueling the trend for the US dollar to increase. Presently, the major currencies fluctuate by half to 1 to 1.5 to 2 to 3 or more cents virtually every day. So what does that mean for us? It means we can profit as a result of these fluctuations. All we do is wait for the market to act. Then, with confirmation that a trend is occurring, we react to the market. Think of it this way. The big market makers are like a herd of elephants. These are the banks, pension funds, corporations, and institutions. The elephants hang around a watering hole until the lead elephant picks up on the scent from another water source. When she moves towards it, the rest of the herd all line up and follow. This is the beginning of a trend. Now, the average person, we keep our distance until we see the elephants all lined up and marching. Then we jump on board for a while and take our profits. In our example, when a trend occurs and money flows into the United States and the value of the US dollar increases, it usually takes 2 to 4 to 6 hours to occur. So we have plenty of time to confirm the trend and take our trades. Because the Forex market only closes on Saturdays, there is always some activity virtually 24 hours a day, 6 days a week. The three main markets are Asia, Europe, and the United States of America. It is this constant, never-ending movement in currencies from bank to bank, country to country, continent to continent that drives the Forex market. It is a heartbeat that never stops. A heartbeat that gets bigger and stronger day by day, week by week, month by month. The software we provide allows you to see this river of currency as it flows, to dip in and take trades daily, weekly or monthly as your capacity allows. We'll provide the following: software, education, support, and ongoing training. You test it for yourself and learn the basic simple skills without risking a dime by using the demo trading accounts we provide for as long as you need until you are completely confident of your trading ability. Quite simply put, allow us to become your portal to the world's financial heartbeat.